Good morning. Good Thursday morning, everybody, and welcome to this edition of Coffee Talk. Um, Today, we're privileged to have Blair Severn with us to talk about how to successfully pull off the quick pivot. Blair is the chairman of Enabling Ideas, and Blair has led different types of strategic transformation at companies like Sony and BMO Financial and Maytag, and literally dozens of other small and medium-sized companies. So we're super happy to have Blair with us today. Welcome, Blair.
Thank you, Norm. Thank you for inviting me today.
You're very welcome. Thanks for taking the time to be with us and to enjoy a cup of coffee.
Absolutely.
This is not actually Starbucks coffee that I have in here. This is just homebrew, but Starbucks mug. I miss the Starbucks.
Yeah, absolutely. We have one literally 3 doors down from our office, and it's all fenced up right now, and you couldn't even get near it if you wanted to.
Yeah. If you're watching this video as a replay, we're, of course, in the midst of the COVID-19 pandemic, and so a lot of things are closed. And hence the reason why we wanted to talk a little bit today about the quick pivot, because in the last, 3-4 weeks, month, I think once companies have sort of oriented themselves to, the differences operationally and what they have to do, we're seeing some remarkable campaigns and focuses on products, or even changing the kinds of products that they offer to kind of respond and to be able to do business, in the context of this pandemic. And I'm personally fascinated by it. I appreciate, of course, because of my marketing background, some of the interesting things that you see companies like Ford doing. We talked a little bit about this with Christine and Heather when they were on. The ability to kind of switch their messaging and marketing around to be about being helpful. Instead of built Ford tough, it's built to help. The funny things that Burger King are doing is like the stay at home of the Whopper, and Wendy's slogans, like just things like that I find highly entertaining and very creative. And I think when everybody's kind of struggling, to see companies respond empathetically is nice. It's comforting. Locally here, we have a company called that's Inksmith, that's also pivoted to, and it's quite a famous business case right now, pivoted to making personal protective equipment, PPE face shields, and has done remarkably well. And I'm not sure how that thinking in a company happens. I've heard about this sort of war room, thinking like bringing a bunch of people together. Is that kind of a common thing in times like this, to build a war room or an idea tank and kind of think through things like that?
Yeah, absolutely. I mean, it's a common response. In the distinction between normal times and crisis response times is we think of those events as strategic planning activities. So, as a management consultancy, there's lots of our types of professionals helping clients do that in, say, more forward-looking times. And you think of it more in a war room time when you're actually dealing with something that is not a year, 2 years, 3 years out. Look, it's something I'm facing today. So there's a burning platform or a sense of urgency that takes over, but the exercise is actually very much the same.
Yeah, that's interesting. Is there, and if it's outside sort of the normal course of your strategic planning, what are the dangers of doing something like that? Like how do you pull that kind of thing off in a reliable way?
Well, the ultimate danger is, what if you're wrong? And you set your company in a direction, even in the short term, that is more destructive than the crisis or the outcome of the crisis itself. So there's a couple of ways to ensure that you aren't wrong in how you construct the war room. And this applies to whether you're doing long-term strategic planning or you're doing crisis response planning. And it's how you structure the activity has a lot to do with your propensity for a successful outcome. So a couple things to be thinking about in that regard is, first and foremost, is the participants in the room. There's a natural bias that will take place if you have a homogeneous group of participants, such as just the senior leadership, or if you have only the generally forward-looking discipline of the company, say the marketing and salespeople, or if you're just simply crisis responding and you only have sort of the operational and human resource people. What you need to do is you need to have a holistic perspective as diverse as possible so you can get all the lenses contributing. And one of the things that we particularly encourage is, and it's sometimes hard for companies to, say, open up their kimono with bringing in outside participants, but it's really important to even have stakeholders, people in your supply chain or even clients, as your idea generating. Because this will get you the most comprehensive set of possibilities. The next thing that's really important to prevent this going awry is to make sure that you create the conditions where you don't conflate your generation stage with your filtering and decision stage. You have to create the conditions that at the beginning there's kind of no idea is a bad idea, recognizing there's going to be some oddball things, but the oddball things can be that one reveal that becomes, a monumental elevation for your company forward. But then you do need a substantive filtering process that takes the ideas and it runs it through sort of a success matrix of financial, management, team, can we get there from here, market, operational, so that your war room conclusions have thoroughly thought through the implications of mobilizing it. Many of these war room outcomes ultimately never get anywhere because somewhere down the trail they decide we can't get there from here. The other thing is risk.
And that's not necessarily a bad thing, right?
No, absolutely. We can't get there from here is a recognition that you may be taking your company into a very costly tangent that is not going to be effective. The one thing that you want to do, though, is you want to realize that at the beginning, not after you've invested a bunch of money and time and effort trying to mobilize something that you ultimately can't get there.
Right. You know, what's interesting, I think about my particular thinking style. I'm not a person who can come up with just rapidly synthesize ideas and fire out creative solutions very quickly. I'm a lot more like a detective. I like to understand the problem and go away and do a bit of research and think through something and then present ideas. But I've been around people who are amazing, fast synthesizing, quick thinking people who can come up with a ton of ideas. Is there a particular thinking style that's better in a war room situation? Do you want those fast thinkers? What are your thoughts on that?
Well, actually, I go back to I'm a huge advocate, and I've seen it time and time again. The greatest success is about the holistic inputs. And so as much as you want holistic inputs from diversity of function, discipline, lens, expertise, you want holistic inputs from different types of thinkers. And to be able to accomplish that, you need to have a construct that allows that to unfold. So when we lead these type of exercises for companies, we make sure that we have a couple of channels of response. So rarely do you want to accomplish the outcome and make the decision in the day of the exercise. You want to break the exercise into two parts, fairly close together so you don't lose momentum. But the first part allows those rapid, quick processor, sort of outwardly thinking, comfortable at communicating in a group, get that out. But then by having a process post the exercise for follow-through thinking, where those more internal processors will have an opportunity to bring back their thoughts after the day and then go back and do the filtering another day. Once you've captured, all the information from different channels. It's like, marketing research. You wouldn't rely on just simply one channel of marketing research. You would do it in a number of different places to collectively get different lenses. So that it's really critical that you not only set up the construct of who's there, you also set up the construct of how you're doing it to ensure that you get this, multidisciplinary, multi-lens, multi-thinker type of input to the exercise.
Is that something that's like, is that something that most organizations like built in have the capability of doing and bringing in that sort of outward perspective and being able to facilitate that? That strikes me as something that's a particular skill set.
Well, there's two different things. There certainly is a skill set and there's value, even if you have internally people that are capable. A lot of executives are capable of leading a conversation with their team.
Sure.
The issue around that is natural bias does come into the conversation when internal people are leading it, when people have had skin in the game for something that they've already built. Particularly, we call it sort of expert bias. And what expert bias is, you've grown up in an industry or in a company of what has been successful. And so you naturally base future success on what historically has worked. That can be a suppression to real innovation, because when we work on these types of exercises, we often would encourage a client or a company to actually bring in outsiders. Outsiders have no bias. They are in a better position to ask us what could be true, because they will not identify with historical expert bias. They'll be more open to what could be true. Then once you have the options on the table of what could be true, that's when you dig into the internal experts to say and ask a different question. You don't ask what to internal experts, because often they are so embedded in what they know to be true, they can't think about something completely different that could be true. Once you have the options of what could be true, then you ask the experts around how would we make this true? That's a very important question to ask, not because otherwise you'll get the natural, well, we can't do that. We don't work that way. That's not the way it's done here. By asking the question slightly differently and saying, how could this be true? You get a much more robust set of outputs from the team. So it's always good where you have, confidants that can come into the conversation and give you that opportunity to say, have you thought about this? This is the way it works in a different industry and doesn't apply to your industry. And this is proven time and time again that most true industry innovations, most true disruptions don't come from within the industry. They come from somebody who's been in another industry and goes, wow, why wouldn't we apply that to this industry that doesn't do it?
Right. That's interesting. There's something you said there about the kind of facilitation of that. Is this something that you do over a 1 day? Let me back up a little bit. I think about these examples of Ford where they haven't changed the product. They're still building F-150s and Ford Mustangs, but they've changed their messaging. So is this kind of process applicable? It doesn't matter whether you're just tweaking messaging or you want to innovate on product. Is it the same process?
It is the same process. The only thing is, what I would, propose to people wanting to do this is they need to think about it as a fluid process, not an event. So when you're in crisis, you will naturally go to the things that need to be dealt with immediately.
Right.
So you're going to go to, how do we have work continuity? How are we keeping our people working from home? Or you'll go to, how do we need to respond to the market because our current messaging no longer is consistent with the current reality? So those types of things are going to happen rapidly, and you're going to address those things rapidly. But what happens there is that's not the holistic nature of a successful pivot. So you would take the process the same way as I've described earlier with those individual events. But there's a point in time where after you've kind of responded to the media crisis and you now need to think about, okay, where's the new normal going to be? What we do know after every crisis is some elements return to the same, but ultimately some elements are changed permanently. And you want to think about it holistically. So if you've done that crisis response, there's still value in saying, okay, now let's take a second breath and look at how we would look at this holistically, because, as you think of it, when you get beyond continuity, now you got to think about where's continued growth, for example. And, just as one example of continued growth, growth, people try and make it very complex, but it's actually quite simple. It can only come from literally one of two places, and that's it. It comes from growing market or winning or buying share. Right. So every growth element is going to be in one of those two areas. If you happen to have now or remain in an industry that is likely to have a long tail of market decline because of the crisis, you need to now reconfigure your participation strategy and targeting, which may not have come up in your crisis response about how are we keeping people working.
Okay. Right? You said participation strategy. What is that?
So participation strategy is a term we use for the strategic boundary of where you play in the market and where you don't. So it's a very defined boundary, unlike targeting, which tends to be focused, but it tends to be somewhat undefined in a very literal boundary. Our targets are a bit fluid in terms of where we go. Participation boundary is a strategic term by clearly understanding where we can best win and where it's unprofitable or ineffective for us to play. Then targeting is within participation boundary. It's a narrower version or a narrow view of your participation, because what it is, it's where can you get the best results from your time, effort, and resources within where you participate.
So when you talk about the best results, this makes me think about how would you measure, like, once you've undergone this process and come up with some ideas and figured out what the pivot looks like, how are you making that? I mean, I imagine you've got people that are just extremely busy just trying to cope with whatever is going on at the moment and figuring out how to work from home and do all that. How do you figure out how to get that done?
Well, you have to make these type of exercises embedded into your activity structure as important as anything else. We use a term, when we can means never will. And so if you don't sort of operationalize, in a way, these activities, these exercises in identifying where and how you're taking the business forward. And as I said, it's fluid, it's not an event. Companies make the mistake of, say, doing strategic planning, once every year to update a strategic plan, or once every 3 or 5 years and look at the next 3 or 5 year outcome. But when you do with that, and I think most people have experienced where we have a 3-year strategic plan, we look at it at 3 years and we go, we never got anywhere close to that, right? Because you didn't operationalize the progress of the activities and thinking of the strategic plan. You made a strategic plan and you separated that activity with your operational activity. What we've designed our structure and how we work, we have a set of solution modules that are a construct that integrate in a building block form. And each of these modules deal with elements of what we call management engine, growth engine, or workflow engine. And each of these activities need to be part of your operational thinking. You don't just do a plan and then now go, okay, we've done our plan, now let's get to work. That plan and the activities need to be a harmonized type of way of working.
And so are you measuring the business results of the implementation of the plan as well as the implementation of the plan?
Yeah, absolutely. And this is really the key. So a lot of companies will create a plan, whether it's a crisis response plan or a long-term strategic plan or even a short-term growth plan, and they will identify a measure, which is the outcome. Financial results are what we need to know and what we're all working towards, but they're a lagging indicator. So if I wait to see what the financial results were of this month or this quarter, it's too late to make any progress on making this quarter better. So in a good exercise is, once you've identified what success looks like, which is ultimately what your strategic plan or your business plan or your quarter plan says, your exercise needs to also include what are the leading indicators along the way that project us towards that success. And every management team looks at sales every week, but sales is what happened in the rearview mirror. What we need to be looking at is two main things. If you do have leading indicators, such as parts of your buyer journey that you can measure along the way, of course you include that. But another simplified key thing that you can do is just simply measure accomplishments. So if you said, we're going to be here by the end of the year, what we want to look at is, and break down is, so where do we need to be in 9 months? Where do we need to be in 6 months? Where do we need to be in 3 months? Not in results, but in initiatives we've put in play. And you already know that if you're 6 months and you have a set of initiatives that your plan said need to be in play by now, and they're not in play, you can already predict you will underperform the 12-month expectation.
Right. I was just, I got so wrapped up in the conversation, I wanted to get to this so soon that I forgot to invite anybody online to ask questions as well. So if you're online and watching and you want to ask Blair a question about the quick pivot, feel free to just add it to the live chat here. You can also tweet me at nclare, at NCLARE, and I'll pick that up on Twitter and I'll post that as well. Blair, is there a difference between the kind of pivot someone could, like this idea of the quick pivot, and something that's sort of just, if you've done good strategic planning and you have a process for that, and something like COVID-19 hits, is it beneficial to re-examine that strategic plan in the context of something like COVID-19? Do you apply the same kind of process for a quick pivot?
Well, yes. In a quick pivot, or what we mean by a quick pivot, is it's the context by which you are now asking the same questions you would ask in your strategic plan. So in a strategic plan, we have a year, 3 years, 5 years to make a success of this plan. In a case of a crisis like COVID-19, that year, 3 years to make a success, we need to figure out how to make a success of the next 3 months, the next 6 months. So the context of what you think is in place really all needs to get revisited in a very quick and urgent way, with the most important factors addressed immediately. If those factors prove to raise a different direction for you, that's when you would drill in deeply. So it's really an exercise to say, okay, yeah, the normal things of where we see our participation strategy, the normal things of where we see our offer advantage, the normal ways of how we are going to expect to generate revenue, does that all still apply over the next 3 to 6 months? And there's two important questions: is, do we make a tactical response for 6 months and return because we are essentially putting a plug in a hole for a period of time? Or does this become, as I say, a long tail type of change that we need to, not only respond immediately for, we need to put in motion, a more developed longer term response. But the the thing is that's important about the quick pivot is that's different than crisis response. Is a crisis response is dealing with a pain point we are going to deal with. A quick pivot is thinking about how are we holistically needing to move forward.
So the example of Ford kind of swapping out their ad campaign is more of a crisis response than a quick pivot. Would that be an example?
It is. And the reason why it's an example is, marketing communications, of course, is all about relevancy, and it's relevancy to being meaningful to the audience that we serve. And right now, the whole world has created a different relevancy. So, and marketing communications is something that is, relatively non-destructive if you change it for a current market environment and then you change it again later, as long as there is some underlying consistency with your brand positioning. So an example of that is seasonal marketing. So Christmas advertising is a seasonal pivot or a seasonal response, which is no different than a crisis response. What pivoting means is it means more in the fabric of the company. And so when you're thinking about pivoting, it's really important to run it through a risk filter. And so probably the most important question you can ask is, what if we're wrong on particularly anything that is going to take the company in a different direction or require capital investment or have a big operating expense. And so the answer is, if it's insignificant and we can pivot again, okay, you don't need to spend a whole lot of time analyzing this. You don't need to be paralyzed by lengthy analysis. Just do it. And if it doesn't quite work out, you're going to adjust along the way. However, if it starts to elevate to a higher sort of concern of disruptive, you can still correct from disruptive. But if you run it through a risk filter and it falls within the destructive or catastrophic category, you need to be pretty careful before you do things. So things like marketing communications from a outreach, advertising, messaging point of view, in and of themselves are rarely destructive, right? So that's why companies can quickly get a different message out, or they can quickly communicate a relevancy for the time, whether it's a crisis time or a seasonal time, as long as they aren't changing their underlying sort of brand equity. But if you are thinking about a whole reconfiguration of your communication platform that will change the brand understanding, that needs to be run through a risk filter.
Sounds complicated. Is there an advantage to being a small, nimble startup company over a large company? I mean, I'm thinking a large company maybe has more resources they can put towards something like this, although a startup company maybe has less inherent risk or less inherent market dominance, and so less risk there. Is there any benefit to being one over the other?
There certainly is a benefit as a smaller company. You can mobilize quicker, right? Big companies are big ships to turn around when you're thinking of a pivot. And that's why you rarely see, sort of innovation disruptions come from big companies, because they have so much capital sort of embedded into the existing infrastructure. It's very, very difficult to convert that infrastructure to get somewhere new from here. We were working with a very major North American bank, and they were looking at strategically what could they change a cost center, their information technology cost center, which was north of $1 billion, into something else and not make it a cost center, make it a profit center. And the academic numbers said for sure you would be way advanced if you turn this and you commercialized your knowledge and talent. But when they got into seeing what it would take to move that ship around in terms of the capabilities that they don't have, they're set up to be an internal service organization, not an external organization. They just went, okay, this is just way too difficult. However, there's a ton of small fintech companies popping up and doing these things because they can mobilize quicker. The important thing, whether you're large or small, is to ask the same questions, the same simple strategic questions. A big company has to have a more comprehensive exploration into those questions. A small company does not have to have a deep exploration, but they still should have the exploration. It's like they say, you don't need a 40-page business plan if you're a small company. You can have a one-page business plan, but have the business plan that's clearly defining where you're going.
That's interesting. I think too, probably the cultural. I'm thinking of a large fintech company like a bank. You've established a corporate culture too around a certain way of behaving, and to shift that mindset in a way that sort of generates a different stream of business, that also I think could be challenging.
Yeah, it is. And, one of the things that if you want to make a strategic shift, and this is something that we often forget about in the strategic process, because the strategic process generally is filtered down from, sort of this, the vision, mission, goals, that hierarchy. And the problem with that, in that construct, in a linear fashion, is the question of, can you get there from here if you are already in an existing direction? And if you want to move, we have a culture module that we work with clients on that often precedes strategy, because if you want to move to a different direction, you often need to redefine the culture to that different direction first, or on its way. So, for example, you may be a very conservative company, and you may have this great opportunity to this great innovation, outcrop. Well, if your culture does not lend itself to an innovation outcrop, no matter what you set up, you are going to be working against the tide to get there. So the example I used, this North American bank, was they realized that they had a great service operation, but no commercial sales culture. So without a commercial sales culture, which would be a business critical factor in succeeding at commercializing this, that was going to be a big, huge, heavy lift. So yeah, absolutely, cultural elements is a core factor to any pivot.
Makes sense. You touched on something earlier. You talked about engines, management, growth. I forgot the third one.
Workflow.
Workflow. So are those kind of the foundational, like in an innovation strategy or as in a pivot, those are the kind of foundational pieces you have to work with?
Well, yes, and it comes from a very basic, simple premise. People try and make strategy and operationalizing extremely complicated. And the more complicated you make it, the less you are going to see the necessary integrations that need to take place for success. So let's make it simple. So anything that you do in your company is going to fall into one of three streams. It's going to be a management activity, it's going to be a growth activity, or it's going to be a workflow, meaning whatever we're performing, whatever we market or sell. And so there's a fourth bucket, which takes up actually a lot of company time, which we call redundancy, which are activities that don't actually drive the company forward. So that's why we don't refer to it as management, growth, or workflow activities. We refer to them as engine activities. And so when you're thinking about taking your company forward in a new direction as a pivot, or regardless, you can't get there unless all of these elements are working towards the same objective. And what happens sometimes in pivoting conversations or strategic planning conversations, this takes me back to what I said earlier, of who's in the room. If it's all about the strategic planning people or the corporate people or the growth people, and you're not actually involving the lens of how this needs to unfold throughout the company, you will likely not have the success, or you certainly won't have the pace of momentum that you need. You'll be facing corrections all along the way.
Right. It looks like we have a couple of questions. I'll just pull these up on screen. This one from Peter Lehman. Since long-term business-to-business sales is more about relationships and trust, which is an excellent point, and less about product, how does a quick pivot affect this reality?
Well, that's a really great question, Peter. Thank you for that. It really doesn't in the sense of the exercise. So when you think about purchasing a product, and if it's a commodity type product, yes, you can just kind of move from one to the other. But, people still buy ultimately from companies they trust, whether it's a B2B relationship or a B2C relationship. Through a product, you've learned to trust the company based on the success of the product. When you're a provider, your product, ultimately, you have to sell the trust a little bit further ahead, because if it happens to be a new client, there isn't necessarily the same obvious experience with the product. So when you're doing a pivot, trust is a very important element in the conversation. And that's part of the holistic view. If we do this, does this build trust equity, or does this confuse the market or confuse the clients and reduces our trust equity? So it's really the same exercise. It's just the context in which the way you ask yourself the questions.
Does that go towards that concept of participation strategy?
Exactly. So, we all know the sort of infamous statement, the media is the message. And there are some organizations from, take back my marketing days, where you are very careful, not just what you say, you're very careful about where you place what you say, because where it is has a specific relevancy. So I'll give you an old example. When I was working with Sony, and Sony was considered, and our own corporate stores were considered to have a certain place in the market. Even though it might be tactically valuable to reach people, we wouldn't place our advertising in the Penny Saver magazine because it reflected not the image of our stores. So one of the things that's very important in terms of, trust and messaging is not just what you say, it's where you say. So participation strategy is the same thing. If you are in a market that you've established a particular degree of trust and you're looking at entering a new market, you have to evaluate, is that tactically good for the time being, but strategically destructive in the long term?
Yeah, that's what I think about companies like Apple, which I'm obviously a huge Apple fan, and they've created a sense of the brand that, for me, I think if Apple came out with a product like a television set, for example, I'd be like, yeah, okay, that makes sense. If that's part of their product strategy. Whereas I think of other brands like, and nothing disparaging against Dell, they make great computers, but I don't think of Dell as a company that would have televisions. And I'm sure they could make an amazing television set, but in my mind, I would see that and I'd be like, oh, that doesn't feel right. And so I think, part of that for me is making sure that whatever you're doing is still true to who you are and what your core beliefs are, and that that strategy is consistent with the permission you've established with your customers to do different things, unless you're taking the company in a completely different direction, which I guess is what you're talking about in participation strategy.
Yes, well, the strategy, again, like I said, growth is very simple. There's two places. There's really only two strategies. And I know a lot of people might go, well, that's ridiculous, because I know there's all sorts of different forms of strategies. But if you make the questions quite, simple, it's where you can win, which is participation strategy, or how you can win, which is offer and operating strategy. So if you start with the simple questions, you get clarity about what to drill down on further. So you can take your company in a new direction through a new participation. Basically, you're moving into a new place in the market, or you can take your company to a new place by offer change. So you can be in the same market with an offer change. So, and an offer change can enhance your trust, or it can actually conflict with your trust, even though, there's a lot of companies like the next shiny thing. And the next shiny thing is, if we did this, we can sell, 100 million of them. Well, if that 100 million is maybe some quick sales, but it's going to now destroy your position or your trust in the market for all these other things that you do, it's a huge mistake. What we've done with some of our corporate clients, small clients tend not to invest in this type of analytics, but corporate clients, where we'll actually do a what could we be research exercise. And so we did one with a major consumer products company that said the number one thing that the survey respondents gave is said, you could be a bank. And they said, you could be a bank because you have such an essence of innovation and an essence of trust we have with you. Those are the two key things that we want in a bank.
Sorry, I was messaging. We have another question that's just come in from Mark Kerr. It's an excellent question. I'm just popping up here on screen. Greetings, Blair and Norm. Would you be able to relate how this quick pivot framework could apply to our current COVID-19 environment? As example, getting ahead of pent-up consumer demand in retail. Oh, okay. So coming out of what's going on now, how can people sort of, which is interesting because I think when we were talking with Christine and Heather about this too, we were talking about this kind of bifurcated look. You're kind of looking at the here and now, what's going on, and how to survive right now, but also like looking for not only what's ahead, but when is what is ahead. Like when do you make that kind of switch to dealing from the current situation to thinking about the future? Like what's the dashboard that you're looking at, kind of saying in terms of, okay, now it's okay to start looking at that. So excellent question.
Yeah, thanks, Mark. Thanks for the question. It is a great question. So when we think about quick pivot, and again, sort of making the definition that quick pivot is something different than crisis response. So crisis response in, say, retail was everybody trying to do whatever they could, if they weren't already online, enhancing their online complement or offering. I mean, there's no surprise that Shopify shares are through the roof with their growth of everybody who hasn't digitized their retail offering, now trying to digitize it. And it's a situation that sometimes crises create the change that we should have already been making. How many people now shore up their insurance after they have an event that their insurance didn't cover, when we should have had that insurance in the first place? So in retail, what's going to happen is I like to kind of consider it not unlike the over-exuberance in the dot-com area. And in the dot-com area, everybody said everything's digitized, everything's going computer, nobody's going to use paper again. And what happened? Yeah, when PCs became prominent, we got rid of carbon copy and typing memos, but we still use a hell of a lot of paper in a different way. So what's important about the pivot is to look at it from a framework of sort of a two-stage response. So what do I need to do now for the current environment, and what do I need to do next? And next is to be able to make, nobody really knows how it's going to unfold. What we do know is some elements are going to return. There will be people that return to stores. I mean, there's a tactile experience, a entertainment experience that people want to go and be out there in a social and three-dimensional environment of shopping. So there will be also, some people that have now experienced online for the first time that go, geez, this is great. Never thought I could buy this type of product online. So the pivot would be, I don't think that any different than any good retailer should be doing is you don't basically funnel customers to buy from you in the way you want to serve them. What you want to do is you want omni-channel and set up a circumstance that you have all avenues open for customers to buy from you in the way that they want to engage with you. So if I was looking at a retail pivot, I'd be looking at certainly how can we re-engage or turn on the flow of volume and capture that return of volume in multiple channel ways. That's what I'd be looking to do. In fact, if my current retail circumstance did not have all those channels of engagement yet.
I was thinking about something funny I saw on social media. I find I'm spending a lot more time on social media these days, for better or for worse, but it was like a fake survey kind of thing that was posted, and it said, who is responsible who or what's responsible for innovation at your company this year? And it was like CTO, CFO, COVID-19. And the bar was all the way over for COVID-19. And I thought, well, that's kind of funny, but you still need the strategic leadership to kind of be able to assemble the people and have this kind of thought leadership. And you still need all of the people in the organization who can execute on that. So I think, necessity is the mother of invention or of innovation, but you still have to have great teams and great leaders to get you through something like this.
Yeah, no doubt. One of the things that's particularly interesting about, say, a crisis as this example is, I heard kind of a glib line, which I thought was kind of funny myself, was, what crises do, it's kind of like you're in a pool and you let the water out of the pool and you see who's wearing a bathing suit or not. The idea, obviously, of that analogy is it reveals where you have weaknesses in your capabilities. So this crisis is actually difficult for many companies right now, but it's also, they say, every crisis is an opportunity, which is another thing lots of people like to say. Well, it really is if you use the circumstance to go, it makes revealing your weaknesses so much easier. And because they become so evident. And that's also in capabilities. So that could be capabilities in your leadership team. It could be capabilities in your, strategic thinking methodologies. It could be weaknesses in how you integrate or harmonize your strategic thinking activities with your operational activities. And it could be, in all sorts of aspects in your management engine or workflow.
Amazing. Well, I think that that covers all the questions from the online audience. Blair, I want to thank you very much for spending an hour with us and having a coffee and chatting about this. That was really interesting. So much to think about in terms of how to do this. So I think one thing I've thought about as you've talked about this is, regardless if you're just changing your messaging or you're changing a bunch of things, there's a lot to think about and a lot to do, and probably done at a time when companies are already doing a lot. So I imagine it's a challenge.
Yeah, you know what? It certainly is a challenge. And as I said, the Burning platform has raised this up into the, have to do category, when this type of thinking often falls in the, I know we need to do, but, or like to do, but it will be the, we never get to it really as thoroughly as we should. But there's an opportunity because also, a lot of companies can't operate in the way that they normally do. So there's some found time. So, as found time, this is exactly, the time to be capitalizing on when you're not spending your time normally doing what the other things you would usually be doing. So, no, it's I appreciate the question that you posed today, Norm. It's a very engaging discussion. As you know, a discussion that I'm quite passionate about, and believe in the value of this type of thinking that companies can do, because I've seen it really help them elevate themselves if they take the opportunity to go through this question, with this context now.
Amazing. Yeah, and if anybody online wants to get a hold of Blair and talk more about this, you can find Blair through his website, enablingsIdeas.com. And I'm sure, Blair, you'd be happy to chat with anybody more about this and bend their ear.
Yeah, my pleasure.
Yeah. Well, thanks, everybody. Thanks for joining us. And we look forward to seeing you in the next Coffee Talk.
Great. Thank you, Norm.